welcome everyone. We appreciate you all attending this morning. More than happy to have you here. I'm just going to be here for a moment, standing in your way of the lovely gentleman that's going to do the presentation for you today by the name of Jim Norton. And I want to tell you a little bit about Dean Dorton before we jump into this. So Dean Dorton is a full-service CPA and business consulting firm. So we have all the traditional services of a CPA firm, tax, audit. We also do outsourced accounting. And then we have a consulting arm within the organization that does, of course, what we are talking about with you today, financial software implementations and ongoing support. But we also do cybersecurity risk assessments. We do various different types of infrastructure and managed services. We do litigation support, IT audits. So we're a very varied firm in the services that we do offer. Certainly talking about one specific today, but if you have needs for any of those at any point, we'd be more than happy to have a conversation with you to see if we're a good fit. We have locations in Lexington, is our headquarters, also in Louisville, and then in Raleigh. The Raleigh office is where much of the financial software or ERP emanates from. We serve clients throughout the Southeast, the nation, and internationally. We do have a particular focus in the Southeast USA area, but we have clients in California, DC, all over the United States, as well as Canada, Australia, and different international locations. We've been a Sage Intacct Premier Partner since 2013. We've been Sage Intacct Partners since 2011. And we are a top 100 VAR. And we've been a top 100 VAR now for a number of years. We were actually number 57 this year. So we're quite pleased with that. We feel like we're kind of a power dynamo organization, and a VAR is a value-added reseller, and that pertains again to the financial software side of the business. So with that, let's see, what's the next slide, Jim? I think we'll, yeah. So with that, I'll turn it over to Jim Norton. Jim's one of our senior consultants on the team. He's got a lot of experience in Sage Intacct and other applications, and he is going to do your presentation for you today. Jim?
Cool. Thanks, Philip. Hello, everyone. My name is Jim. I'm a senior software consultant with Dean Dorton. Here to talk to you today about my favorite Sage Intacct module, which is Dynamic Allocations. So in the session today, you're going to learn when to use Sage Intacct Dynamic Allocations, why Dynamic Allocations can be used by all businesses and not only for nonprofits, what the mechanics of the Dynamic Allocations module look like. And we're going to talk about how some companies have used this module for powerful creative use cases, and take a look at what financial statements can look like before and after Dynamic Allocations. We are going to start with a little intro about Sage Intacct for those of you who may not be as familiar with the software, but I'll try to go through that quickly so we have a lot of time to cover this cool creative stuff we're going to be talking about. So we'll start off with about Sage Intacct. Sage Intacct is a cloud-based ERP solution. Generally, as organizations are growing, they have trouble finding a scalable accounting solution that's capable of providing real-time insights, consolidation across entities, and control over their financial data. So Sage Intacct provides a best-in-class true cloud solution that uses its open API to provide an ecosystem of marketplace partners that cater to your unique requirements in a single solution. So with Sage Intacct, you can get dashboard analytics, approval workflows, and controlled access, which means all the functions across the organization are going to be able to see relevant, easy to understand data and make proactive decisions. So one of the ways that Sage Intacct is different than many softwares is they use something that's called the dimension concept. And this concept is particularly important to the dynamic allocations material we're going to cover in a little bit. The dimension concept, think of it as kind of like hashtags for your financial data. So when you are recording transactions in your system, you're able to specify all different attributes about your transaction. And I really like this graphic. It breaks them up into the different types of tags that people may have on their data. So as you're recording a transaction, you may want to know what this transaction is related to, which is maybe an item or a class. Who is this transaction related to, which could be a customer, vendor, or employee. And where did this transaction happen? So that could be a physical location, it could be a business entity, it could be a department, it could be a project. And Sage Intacct, by allowing you to tag your data to all these different attributes, lets you then obviously collect that data and create all kinds of reporting on it. Now this feeds into Sage Intacct's modern chart of accounts concept. So for those of you who have worked with a legacy system, you may be very familiar with the old chart of accounts or the segmented chart of accounts. And your chart of accounts in the old world may have looked like GL-location-department-business unit. Everything's a segment, and you get a million iterations of these examples that I have on the slide, where if you want to be able to tag GL account 6120 for a different location, department, and business unit, you have to create that unique string for every combination you could possibly think of, or you can't record the transaction. Contrast that with the graphic you see on the bottom of the slide, where the account portion is just one box. It's a natural GL account. And then all these other attributes, which we've called out in these red circles, are what Sage Intacct calls dimensions. So those dimensions enable you to choose what department is this transaction related to? What's the business unit? What's the project? What's the customer? And you're choosing all of those independently to mix and match it the way you need, so that your chart of accounts doesn't become this massive entity to maintain. You can choose the different combinations of attributes you need as you go. And what does that give you? It kind of gives you what we like to think of as a Rubiks Cube, where you can mix and match and twist and turn your account and the dimensions to get the reporting that you need. And what might that reporting look like? It might look something like this. So for example, in this example, we're leveraging the power of the customer dimension. And what we're doing here is we're giving you a report of revenue by customer. Because when you record that revenue transaction into Sage Intacct, you are tagging a customer, you then get the capability to create a report within the software where you've got all your customers listed in the rows here, and then in the columns, we're seeing the different types of revenue that those customers are driving. Now, another example is using the where concept, so a department. This is an example of all of our expenditures across departments. So by using the dimension concept and tagging your data to dimensions, you then gain the flexibility to get the reporting and pivot your data on any one of those dimensions within your accounting system, not having to export it out and manipulate it. So with that as a backdrop, we're going to talk about dynamic allocations. So you might recall earlier, I said that Sage Intacct allows all your functions across the organization to see relevant, easy to understand data to make proactive decisions. We talked about Intacct's powerful ability to aggregate data by dimensions and give us the flexible reporting and ability to slice and dice as we want. With all that as a backdrop, dynamic allocations fits into the picture really well. Dynamic allocation solves for the need to take revenue and expenses that you might be isolating in one place and spreading them across dimension values. So common examples that we've encountered and that we've seen are things like allocating your fringe benefit expense based on each department's share of gross salaries, allocating salaries to projects based on the number of hours that people worked in a project, allocating overhead expenses to the departments based on each department's share of the organization's overall revenue. There's a never-ending list of all the different allocations somebody may want or need to do. You can get creative with this module, and you can do things like allocate a percentage of the project's overall expenses back to the project, so you can have an indirect charge. So those of you who maybe are nonprofits or federal contractors might be familiar with the concept of an allowable indirect rate. We've seen a really high number of creative use cases with this module, all taking away what used to be manual effort and fully automating it. we've had customers save anywhere from days to weeks worth of time with this module. We had one customer that had over 40 allocations, and in their old system, they had to run each allocation manually in sequence and make sure that they did it in the right order. And then even after they had run the allocations in their old system, they would still be exporting out results and making journal entries to true them up because their old system didn't do the allocations with enough precision to just make it a done job. Well, with Sage Intacct, all of that work was replaced with a one-click process. And these are the kinds of results everybody can achieve with this module. So let's talk a little bit more about how it's designed and what it does. So this graphic at a high level describes what dynamic allocations does. It highlights 3 of the 4 major components of the allocation build. So what you start with when you're building an allocation in dynamic allocations is what is the source? And the source is what do I want to allocate? So that may be a pool of costs such as my benefits, my fringe, that could be my overhead expenses. We can define what that source is. The second step in the allocation process is basis. And basis is how do I want to allocate? So if we have a basis could be something like number of full-time equivalents per department. A basis could be something like amount of revenue per department. That is defining how we compute that allocation, and it's going to derive a percentage that needs to be split out. And then finally, you have a target, which is where do I want to allocate? So when I'm done, when you've done this computation and figured out what the allocation is, what GL accounts do I want to send that to? And finally, your end result is that you get allocated costs reflecting the true performance. Now, some of you who may have seen Intacct before or work in Intacct may know that you have something called transaction allocations, which are part of the core product. Transaction allocations are used when you know the split of your allocation up front and you want to allocate that transaction right at the time of entry. Dynamic allocations is for when you don't know that because you haven't figured out what the allocation is yet because you need more information to do that. So a great example, as we've been using, is something like allocating out fringe benefits based on the department's share of salaries. But we may not know the department's share of salaries until payroll comes in. So how would we allocate that up front? We need something to come in and do that allocation for us later. Or what is the department's share of revenue? And we're going to use that to allocate out different overhead expenses. If we don't know the revenue, we can't give an upfront allocation. So dynamic allocations is going and figuring out those allocations for you and then giving you that spread. So dynamic allocations are used generally after the fact. You conduct them on a periodic basis, but you can have them run as frequently as daily. They're allocated at the account amount level, which means it's taking the balance in an account and allocating that balance. If you're working with third-party tools that don't have a drop-down to choose an allocation, so if you're using Bill.com, you're using any other kind of AP automation or credit card automation tool, and if those tools don't have the ability to do allocations, you could have the dynamic allocations handle all this allocation for you after the transactions come in. If you need allocations to be based on a calculated percentage of something, great reason to use dynamic allocations. If you need to have flexibility in which account groups you use to do your allocation, which time periods. And if you want your allocations to post to what's called a user-defined book in Intacct, which allows you the capability to see your financial reports before and after allocations to understand the impact, dynamic allocations is the right choice. And finally, if you want to have an auditable, reasonable, and consistent methodology, which is often what auditors are looking for when they're reviewing any kind of allocations, dynamic allocations is going to help you support that. So let's talk about the setup and mechanics. It's actually a very easy module to turn on because the configuration is literally just flipping a switch to turn the module on. What you do next is actually build all the allocations, and that's where the work comes in. So it's a 4-step process here. We want to subscribe to dynamic allocations. Then you want to set up an allocation definition, then you generate that allocation, and you verify the results. So again, just talking about the mechanics a little bit. Dynamic allocations is a balanced allocation, not a transaction level allocation. So you're allocating the balance inside a GL account. You're not allocating every single individual transaction within that account. You are looking to allocate revenues, expenses, maybe even balance sheet account balances inside of a single business entity. And account allocation definitions are the foundation of dynamic allocations. When you turn dynamic allocations on inside your Sage Intacct environment, you're going to see a screen like you have in the screenshot on this slide, where you're going to have more setup under allocations than you had before. So I created this graphic. How do you fully charge your account allocation definition? And I have this little battery theme going on here. So you're going to have some admin steps. Then you're going to define your source pool, then define your basis, and then specify your target entry. These are the 4 steps of building an account allocation definition, which is how you tell Intacct, here's how I want you to handle the allocation of my balances. So step 1 inside your account allocation definition is you need to specify how am I having Intacct treat each of the dimensions. So as we said early on, dimensions are critical to Intacct's concept for how you're able to do financial reporting and get all this great detail about your transactions. When you define an account allocation definition, the first thing you have to do is tell Intacct how to treat each of the dimensions that you have in your system for that allocation. You have 3 options. You can say, I want this dimension to be an allocation focus, which means that Intacct is going to calculate how the amount of the account assigned to that dimension needs to change. So for example, if I had a project as an allocation focus, what I'm telling Intacct is take the amount in this GL account and allocate out that amount to all the different projects so that each project receives their fair share. So allocation focus means this is the dimension that I want to receive its fair share. If you say preserve values in a dimension treatment scenario, preserve values means that that dimension is not going to change. So when you have the ultimate allocated entry, if the project was tagged in your source balance, that same project is going to be tagged in your allocated entry. There's going to be no change. There's no fair share activity going on there. It's just retaining its value. And then finally, you have not considered. And not considered means don't do anything. That's exactly like it sounds. You do have the capability at the end to override. So if, say I set a location to not considered, I can say in the final step of my allocation, I want you to always use this one location ID for all lines of my allocated entry. So that's part of the power of not considered. So your next step is defining your source pool. Remember, your source pool is what is the balance that I'm looking to allocate. And these are all the different components of building a source pool. So your account group is going to specify what account group do I want to allocate the balance for. In the percentage to allocate, you can indicate how much of that balance I want to allocate. So a lot of times this may be 100% because I'm looking to allocate the whole thing so everybody receives their fair share. But what if I have an indirect rate situation where I know I have a agreed upon indirect rate that I'm allowed to bill to a certain contract? Well, what I can say is allocate 15%, and then maybe my account group would be something like all expenses or allowable expenses. And what that's going to do is it's going to allow me to generate an indirect rate allocation for 15% of the expenses. And if I layer on something like maybe a project billing, I can even bill that back to the contractor. For your reporting book, you can choose what book your amounts reside in that you're looking to allocate. So you can have your accrual books, you can have your cash books, and you can choose either one of those. Alternate book means that you can select another book in addition to your accrual or cash book. So this uses the concept that Intacct calls user-defined books. And as I said before, allocations actually post into a user-defined book. So A very common application is to say, I want you to look at my source pool and give me all of the amounts that are in my accrual book, and also give me all the amounts that are in my allocation book, so that I'm getting an allocation that actually looks at the entries I booked into accrual, plus anything that's been allocated previously, and it compounds upon itself. For my source pool time period, they're dynamic reporting periods, so you have things like current month. You even have the ability to look at what's the activity that happened yesterday. I want you to run the allocation just on the activity from yesterday. So you can get very granular with those source pool over time periods. Your true-up methodology is when I find an allocation that's already been run for the same period, what do you want me to do? Do you want me to auto-reverse the prior post and then record a new entry? Do you want me to record an entry just for the change that's happened since last time you run it? Or do you want me to do nothing? Those are my true-up methodologies. And then finally, in the dimension filters, you can say, I only want you to look at the activity that happened for a certain dimension or for a certain group of dimensions. So you have the capability to really get in there and narrow down your source pool so that you are allocating just exactly what you want to allocate. And in this example, we actually, on the screen, did an allocation where we are allocating the accounting expense, but only the accounting expense that is tagged to the software vendor. So you can get in there, and if you wanted to, allocate right down to one dimension and just pull that balance for allocation. So we just talked about source pool. If the source pool is the what am I looking to allocate, the basis then answers the question, how do I want to allocate that? So you have two methods available. You have what's called dynamic relative account financial or relative account statistical. And that basically just means, do I want to allocate based on a general ledger account balance, or do I want to allocate based on a statistical account balance? So if you're using statistical accounts in Sage Intacct, you can track non-financial data like headcount, like number of hours, like number of customers, number of vendors, any kind of quantitative information. And you can use that information in your allocations. One classic example we see of that is when people allocate occupancy expense, but they allocate it based on the amount of square footage that each department or project may occupy. So we record statistical entries to record how much square footage a department occupies, and then dynamic allocations can go look back and say, okay, based on what you've entered, I can see that this department occupies this percentage of your overall square footage, and then the other department occupies this percentage, and it will allocate out any of your expenses based on their share of square footage. The accumulation allows you to choose, do I want to allocate based on the activity that's happened in the account for this period, or do I want to allocate based on the account's ending balance for this period? So this becomes really important when maybe your basis is something like a balance sheet account, and maybe you want to say, based on each department's share of liabilities at month end, allocate this balance. Well, that's what ending balance will do for you. And then your reporting book. So again, you can get at your accrual books and your cash books, and you can also get at your allocation book. So this is exactly the same as the options you had in source. Your time periods, you have the same time period options you had available in the source. And then you have the same filtering options you had available if you only wanted to look at the, a subset of your basis. Then the final option and the easiest option, easiest step rather of the whole process is your target entry. And your target entry is just specifying once we've figured all this out and determined here's how I want to split this revenue or expense, what GL accounts do you want me to send that entry to? What book do you want me to send that entry to? What journal do you want me to post it to? Sage Intacct posts all allocation entries to a user-defined book. Generally, I label that book allocations. And the reason that we do this is because by posting to a user-defined book, you're going to have the visibility to see the before and after, so you can really communicate the impact that an allocation has had. And we'll see this when we get into the demo and more of a real-life scenario. You can send your allocation, so allocation destination. In an expense scenario, that refers to the debit account. In a revenue scenario, that would refer to the credit account. That's saying, what do you want me to debit or credit when I determine what this allocated balance is? And then on the reversing source pool, you can have it reverse out of a single GL account, or you can have it come out of the source account. So if I've got a group of accounts, say I've got a group of accounts called occupancy, and that's made up of rent expense and utilities expense and whatever other expense you may have, you can have the reversal entry so that the credit side of that allocation come out of each of those individual accounts so you can see them clearing. Or you can have a single GL account that's used for allocation so you can see a debit and a credit to the same account. Both options are possible. And then remember I had said in the dimension treatment section, if you choose for any of your dimensions to not be considered, you're able to override them down here at the target entry stage. So you're able to say, when you post the allocation entry, always use location 100, always use location 200, whatever the case might be. You're able to override that there. Okay, so we've done a lot of theory up to this point. The theory is important to give you a general overview of how the module works. But now I want to show you so that you can put it into more of a real life context. So what I'm going to demo for you at this stage is I'm going to show you how we would go about setting up 3 allocations that we see pretty commonly, and then let you see what it looks like when those allocations are run and what your results can look like. So I'm going to hop over into my Intacct environment. And we're in my favorite Intacct environment, Pumpkin Spice Awareness Corp, which is an organization created to eradicate the inequity that pumpkin spice receives when we are outside of the fall season. So here we are in Pumpkin Spice Awareness Corp. And I'm going to show you 3 different allocations that we can build. So to build allocations, we're going to go through our general ledger module. We're going to go to setup, and we're going to look at our account allocation definitions, which is the set of rules that we define for how a dynamic allocation runs. The first allocation I want to show you is other benefits. So this example is something like a fringe allocation where maybe we want to take the fringe expenses and allocate them out based on a percentage of gross salaries. So when I'm creating an allocation, I have these admin type steps. So I might call this allocation ID other benefits. And then you get to say, what is the description? So what is this allocation doing? What's the methodology of this allocation? So in this case, I want to allocate my other employee benefits, and I want them to follow my direct labor hours. And then in my dimension treatment section, I'm saying, okay, so for each of my funds or locations, how do I want to treat that? So I want those to preserve values. I don't want those to change. And then for my vendor, for my customer, for a lot of these dimensions, I don't really care for the other benefits allocation. I'm not tagging them to a vendor. I don't need them to be tagged to a vendor, so don't do anything. But I do care about project. I want to make sure that each project receives its fair share of those other benefits so that I can evaluate my project profitability. Because if I don't do that, I may have, all of my fringe expenses sitting in a management and general kind of project or department, and I won't see that each project actually consumed all these benefits that follow the direct labor dollars that the employees working on them incurred. So it's important to be able to get that kind of breakout. Same thing may be true of department. I don't want all of my benefits expenses to just sit there in this G&A department. I want to see what departments actually consume those expenses. So that's my dimension treatment section. In the source pool, I'm going to identify what is the account group that holds the expenses I'm looking to allocate. So I can choose any account group I want in the system. Right now I have other employee benefits. And that is made up of, in this case, a single GL account where I record my other employee benefits. I want to allocate 100% of that. I want to take the amounts from my accrual book. And actually, I also want to see anything that may have already been recorded as an allocation. So I want to consider that when I pull my source balance. So I'm going to add that book in and hit done. All I did to do that is I hit select. I chose the book that holds the additional balances that I want to consider. I hit done. And then here I'm saying use the amounts from both the main reporting book and the alternate books. This is how you can have allocations build upon each other so that you're able to get the true allocated result of your whatever you're looking to look at, whether it's a project, whether it's a department, you get the true result. What do I want to look at for my source pool time period? So I want to see the current month's activity. If I find an allocation that has already run, how do I want to handle that? I'm a fan of auto reverse prior post. What that does is it takes your previously generated allocation entry and reverses it, and then it creates a new allocation entry, and it does both of those on the exact same date so that you always have the correct as of whatever date reporting that you're looking to get. Now notice I've further filtered my source pool, so I can say, okay, I want to see only the other employee benefits that are tagged to Entity 100, and I want to see only the other employee benefits that were tagged to Department 999, because maybe that's where I put all of my shared expenses that I want to be able to allocate out later, and I want to be able to see that that has cleared. When I get to the basis section, I'm able to choose how do I want to allocate. Remember we said we have dynamic relative account financial, dynamic relative account statistical. In this case, I'm looking to allocate based on financial because salary and wages is a general ledger account. That's a financial piece of data that I need to allocate. So I'm looking to say anything that's tagged to these different categories, whether it's salaries and wages, commissions, or compensation of officers, I want you to consider all of that. Tell me each project share of that expense, and then allocate out these other employee benefit expenses based on their fair share of salary and wages expense. Now I can include my alternate book if any of the salaries and wages for whatever reason may have been posted to an alternate book. I can include that so that I can see that full picture. Again, I'm looking at the current month, and I'm looking at salaries and wages that are booked to Entity 100. I've also chosen here, drop negative basis lines from consideration. So my salary and wages expense, because it's an expense account, is going to have a normal debit balance. So what I'm telling it here is if there's any credits in that account, ignore those. I only want to allocate based on the debit activity. If I don't want that, all I have to do is uncheck this box. But it's an option you have so that if you don't want anything that is other than the normal account sign, you can check it. And then finally, the easiest step of them all, I just say, okay, when you're done, put it in the allocations book, put it in the allocations journal, put the entry to account 5127, and when you reverse the entry, I would like you to credit whatever the source account was. So that could be many accounts that live inside your source pool, or it could be one account if your source pool is a member of one. If you wanted it to come out of a specific account, I could also say, take it right out of the same account. You have the flexibility there. If I had any dimensions that are not considered, they are available here to override. So I can say, well, you know what? I would like for you to always tag a certain vendor in this allocated entry. And I would like you to always tag Snorlax. So I'm going to choose the vendor, Snorlax, and he is going to appear on every single line of the allocated entry because I've chosen to override that. And the reason that I was able to choose to override that is because all the way up here, I set it to not considered. So that's the bones behind building an allocation. I'm not going to go through building another allocation that's exactly the same thing. However, I will show you another way that we can build allocations. So what we just did is 100% balance allocation. What if we want less than 100%? So say, for example, I want to be able to tag indirect expenses so that maybe I have a federal contract. I'm working with the government and I need to bill them back a certain markup. Or maybe I have, with just a regular contract with any one of my customers, there's a certain markup I can charge on expenses, and that may apply to expenses that I allocate. Well, what I can do is I can say, here's my percentage to allocate. What I'm doing in this example is I'm taking an account group called expenditures. So that's pretty much all the expenses that are charged to a certain project. And I want to take 15% of those expenses because that's the rate that I'm allowed per my contract. And I want to charge them back to the project as allowed kind of overhead or indirect. This is kind of how you would accomplish that, right? You would say, here's the account group of the expenditures. Here's the percentage I want you to pull for that. And then I want you to only look at, by the way, the expenditures for my certain contract that I'm working on. And then you're going to allocate for the basis, you're going to basically tell it to look at itself for the basis. So you're going to find everything is going to go just for the expenses that you charge to that grant. So you're not going to be looking at, oh, here's my whole organization's expenses. I want to say, give me all the expenses for that grant. It's just a way of making sure that the system recognizes that you have a balance to be allocated. And then finally, I can override all these things that I had set to not considered, and I can flag my target lines as billable so long as I'm using project billing inside of Intacct. So I can say, here's the department that you should use, here's the project code, customer item, and so forth. Now, what does this look like when it's actually run? That's a good, important question. And you're able to see the allocation log of every allocation you've ever generated inside the Dynamic Allocations module. So here we have a history of the allocations that we've run. And let me actually reverse this run order. So this is going to show you from, in this case, the farthest back in history to the most current in history. And what are their run times? Who did it? Did it pass or fail? This is kind of, it's a good audit trail. On top of that, if you click view, the first thing you're going to get in terms of drill down and visibility into your allocation is, what is the allocated journal entry that Intacct created for me? So here you see all the debits and credits that happened. You can see it came out of a shared project, and it went into all these other projects. The next logical question is, how did it figure that out? And how do I know that it's right? So if you click description, you are taken to an automated allocation snapshot. What this does is it shows you a reasonable, consistent methodology has been applied, which is one of the key things we wanted to make sure we had from an audit perspective. Notice nothing in here is editable. This is just a snapshot in time from when the allocation ran so that you can always pull this and say, here's how it was done. Now, if I wanted to know, what did you use as a source pool to do that calculation? I can click See Source Pool Calculation, and Intacct is going to give me a report, which I can then open up and look at and send to whoever I may want, which details what made up the source pool. And I have a bunch of Excel add-ins, so that's why mine takes so long to load, but here we go. So this tells you, okay, you asked me to allocate this account group. Here's what I found. This is the balance that was in that account group. This is what I allocated. So you know, yeah, that looks right. And then the same thing with the basis. You may say, okay, I know what you allocated, but what did you use to determine how it gets allocated out? So I can click See Basis Calculation, and Intacct is going to show me, here's what the basis is. So let's open that up. And if you don't trust it initially, you could always recalculate yourself, and I'll show you and be able to prove very easily that it's right. So Intacct found, here's the salaries that were charged to each of these departments or projects. And if I wanted to allocate, if I wanted to compute the percentages that it should have been using, I can easily do that. So here are the numbers that represent each share of the expense. Now, if I go down to my target entry section in my allocation and click See Dynamic Split Calculation, look at those numbers. They look an awful lot like what I just calculated myself because I didn't trust it. And this tells me I can trust it, and that calculation is going to be correct because it's going out to quite a level of precision, even more than I just did here in Excel, and it's giving me that calculation. So we know it's right. And it's done all of that without me having to go do all this Excel work because the system has pulled it, the system has calculated, the system has posted my journal entry. What do I get as a reporting byproduct of that? Well, if we look at the financial reports, remember I said one of the benefits of posting to a user-defined book is I'm able to see before and after. So in this example, I'm going to look at my P&L by department as of 6:30, and look what I have here. I have my pre-allocation column, and I'll blow this up in case it's small for any of you looking on WebEx. I have for each department, I have my pre-allocation numbers, I have my allocation results, and I have my post-allocation numbers. So I get a before and after. I can see based on this who's getting each share of the allocation. Here I've got my allocated occupancy costs. Here I've got my allocated indirect costs. Here I've got other employee benefits that were allocated. And if I go over to the right, I see them coming out. So in management in general, maybe they didn't have any benefits costs that they should have had, so it all cleared out. On the occupancy side, they are left with a share of occupancy, but it's their fair share. You're not leaving the whole thing sitting here in management in general. If I didn't have this, imagine all of my financials would only be the pre-allocation column, and I wouldn't know that, hey, my counseling services department, they didn't just lose $11,000, they lost $51,000 when you take into account how much of the occupancy that they actually take up, how much of the employee benefits that they actually consumed. It's a radically different view of your organization, and it's a more accurate view of how your different functions are doing and performing. And how are your departments? How are your projects? Are they actually profitable? You don't know really how profitable your projects are if you only look at this first column as your story. Now the same thing, so I just showed you department, but I can also show you, because we're using the dimension concept and project as a dimension, okay, in one report I may have pivoted by department, but now in this report I'm pivoting by project. And now I'm seeing on the project level, okay, this project, it was losing $8,000, now it's losing $21,000. Could some of that be because I didn't do my billing yet? Yeah, because I didn't do my billing yet in this demo environment, but the fact remains the same that you have a different result based on the results of your allocation. And you don't have to do all kinds of exporting out and calculating these allocations in Excel and then using formulas to figure out how much they each get. It's all just here in the system. You see the before and after. If you don't want to see the before and after, I can make a really quick change to see, so you just see this one column that has the allocated results loaded into it. So you have total flexibility into how much of this detail you see, but you have the capability to see each data point independently for your own kind of analysis. And when I want to run an allocation, it's as simple as going into General Ledger, and you have a button here underneath Account Allocations, which allows you to generate an allocation. So I can say, post this at 6:30, as of 6:30. I can pick an allocation, and I can run it. So maybe I wanted to run my, occupancy allocation, although I've already run it, but I'll do it again. So I can hit generate, and it's going to go into the queue, and then eventually it'll send me an email when it's done, or if I'm really impatient, I can keep hitting refresh, and I'll see how it's doing in closer to real time. So that's an example of how to build independent allocations, and I actually just got an email that it was done already. Sometimes they run quite fast, and you can see it passed, and I'll be able to get to that same layer of detail there. So that's how you do an allocation. Now, the next part of this is, that's great that I can run allocations one by one, but what if I have a ton of allocations to run and I don't want to have to click one by one to run them? Well, that's where account allocation groups come in. And you're able to group these allocations and also define the order in which the allocations run. Most people have a bunch of allocations that they need to run at a period end, and each one is dependent upon the next. So, for example, I could not have accurately calculated my indirect expense charge if I didn't have those benefits allocated first, and if I didn't have that occupancy allocated first. Those may be direct expenses under the language of my contract that I want to make sure get captured. So you can control when do they run, and you can also control if one allocation is dependent on another one, I'm not going to let that allocation run unless the one before it succeeded, which is the concept that Intacct calls group error processing method. So if you're running a group of allocations, you have two choices. You can say if this group, if the order of the allocations matters, if the results depend upon the results of an earlier allocation, or if I just don't want to run the allocations one by one, you can say stop if a group member in the sequence fails. What that means is if I run a group and somewhere in the middle of this group of maybe like 40, 50 allocations, it fails, the allocation process is going to stop and it's going to give you an error so that you know I have to fix this before I move forward. That ensures the integrity of your data so that you're not getting an allocation that skipped a step and is no longer accurate. If none of those things are pertinent to your situation, if you're just using the grouping mechanism really kind of as a convenience to be able to run a bunch of allocations in one shot, you have an option called skip and continue if a member in the sequence fails. So that lets you say, just carry on because I don't really care if one of them fails. Maybe it's not always going to succeed because maybe there's not always going to be a balance in the source, or there's not always going to be a balance in the basis, but that's okay. So moving into our next and last demo, I'm going to show you how to do allocation groups. So what I have here, it's very easy. Once you've built all your allocation definitions, you also have the next one down, which is account allocation groups. Maybe I have a group of allocations that I run at period end. So I'm going to call it period end. I'm going to give it a description of period end allocations. And here are my group error processing methods that I talked about before. Do I want to stop if a group member in the sequence fails, or do I want to skip and continue? A lot of times clients will stop because they want to make sure that the allocations are compounding properly. So they do just that. And then you can choose what are the different members of my allocation. So here I have other benefits, here I have occupancy, and then here I have my indirect. I'm identifying based on the 1, 2, 3, this is the order in which they run. So what I'm saying is first, allocate my benefits, then allocate my occupancy, then do my indirect allocation. So this makes it, for sure, my indirect allocation is not going to run until I have first done these two allocations. And since this depends on numbers that come from these first two, that's exactly what I want. And then I hit save. So what does that look like in practice? Well, when you've run an account allocation definition, if you look at the log, you're going to see this is a group, period end, and you can see here's the order in which they ran. So first it ran other benefits, then it ran occupancy, then it ran indirect. So if I go look at my indirect, just to make sure that it was right, you're going to notice a couple things. First, you're going to notice, here's the entry. Then I can go to my description, and I want to know, what did you find for the source pool? This is how I'm going to get some comfort that it did include the results of the previous allocation like I asked it to. So we'll wait for that to load up in my Excel. And here we go. So these account numbers here that it found, 5127, I know I didn't include the names in this report, but 5127 is my other benefit. That's the allocation entry that posted before. 5991, that's my allocated indirect occupancy. So here I've got the source pool that it used to figure out what balance needed to be allocated, included the results of prior allocations so that I was getting a fully loaded allocation like I wanted. And then I can actually take a look at, if we look at the allocated indirect costs here, notice this 281736 that was allocated. Well, based on what I defined in my snapshot, we know that should be 15% of all of its expenditures. Wasn't it a lot of work when we used to have to go and calculate that ourselves and then post the indirect? So I would sit here before I had dynamic allocations. I would sit here and I would say, okay, here's 6139.53 for my personnel expenses. Here's 5,500 for my program expenses. Here's 7142.85 for my occupancy. And then I should be taking that times 0.15, and I should get 281736. That's exactly the number that's there without me having to do all that, because we've built it into the allocation definition. And that's where you see, here's my 281736. By the way, if I'm going to use project billing and I want to generate an invoice for this contract that includes that indirect, when I preview my project billing, if I scroll down to the bottom here, here's my indirect entry. So it comes through as a billable transaction, which I'm then able to include on an invoice to my contractor. So even the work of having to manually add items into your invoices is not there anymore, because Allocations is taking that, marking it as a billable transaction, and then passing it through so you're ready to invoice. So that concludes my demo. I would like to open it up for questions now. And as I do that, I'm going to shift to the next slide, which has our contact information so that you can take that down as well. So open up to any questions. Feel free to put them into the chat or Q&A.
Yeah. Awesome. Thank you, Jim. I did have one that came in. Can you, I guess, explain a little bit how this has changed other clients' workload in allocations?
Sure. Yeah. So one example I can think of is that we had a client who was running up to 40 different allocations manually in their old system prior to Sage Intacct. And they would have to run those one by one. And a person on their team, a high-level person, I believe it was the controller, would actually spend almost an entire day or a little bit more than a day running those allocations every single month and then cleaning them up and truing them up for a few more hours on top of that. They replaced this because of the fact that they can do allocation groups and define the order. And because the allocation module lets you be so flexible with filtering, they replaced all of that process with building one allocation group and doing one click. So it took away at least 12 hours a month, if not more, out of a controller level person's work, which was huge.